Hey guys, this is Karthik Kantwal from Apex Finserv and I'm back with an analysis video for you guys. As promised during the weekend, I have come here with the expiry analysis video for tomorrow, the weekly expiry for the indices. But before we move on to the watch list, I'd like to thank you guys with all my heart for showing a lot of support on the mentorship program. I was honestly not expecting all the 10 slots to be filled in so quickly, but you guys did show up, and the slots for the August are filled, and I'll let you know when the slots for the September batch open up during the last week of August. I am more than excited to start this, and I'm really looking forward to share all the knowledge that I have with you guys through the program. Now, without wasting much time, moving on to the equity side first, as is the tradition, starting with Hindalco. Now, what we have here is a strong high-low, high-low structure that was in the making since the last couple of weeks, but we do have some strong signs of reversal, as in a microstructure has started with multiple lower swing highs and some small lower lows as well. So we're going to go for a roll reversal, resistance based entry at 450, a short, stop loss at 456, idle targets 1% on the downside. Moving on to the second equity trade is on Axis Bank. Now, Axis Bank has been a really big participant in the recent rally in the markets, especially on the banking side. So it has come all the way from 715 to 752, which makes it almost 9 to 10%. It will do that as well soon. So we are going to go for a simple reclamation of support based entry. You can see 745 has been a historical support. It was strongly broken, but in a similar fashion it has been strongly reclaimed now. So we're going to go for a long there. Stop loss at 735, idle targets 1% on the upside. The third trade that we have is on Hindalco. Now, similar to Axis Bank, we have a historical support at 2400, a big round number. It acted as a really strong demand zone and support as well, but it was strongly broken. Now, in the recent rally, it did try to reclaim that, but even before it approached that level, people started selling off, or profit booking started happening. You do have a resemblance of a flag pattern here, but no continuous buying happening even after the channel has been broken. So we are going to go for a short exactly at that level because the support and resistance still stands. It has not been reclaimed. Stop loss at 2425, idle targets 1% on the downside. The fourth equity trade that we have is on M&M. Now, this is a similar pattern to Axis Bank. You'll see strong support level broken on the downside, reclaimed, but with the help of a bullish flag pattern, it has been reclaimed. Or in simple words, a higher low structure has started with the most recent swing high now corresponding to the support turn resistance, and now again support at 757. So that's exactly where we're planning to go long at. Stop loss at 747, idle targets 1% on the upside. The final equity trade is on Biocon. Now, most of the charts are similar because you had support turned resistances in the sell-off, and in the recent market rally they did try to reclaim that. Some of them could and some of them could not. Biocon sadly happens to be in one of those lists, but on the losing side. So 390 historical support, tried to reclaim it, was punched in the face and it fell flat. That is exactly where we are going to go short. Stop loss at 395, idle targets 1% on the downside. Now, moving on to the indices, because tomorrow is the expiry and that is what you guys enjoy the most, I believe. Talking about Nifty first. Now, the biggest problem that we are going to have when we talk about indices right now, at least, is the lack of historical interaction at the recent price levels. These are levels that were not seen before. As a result, we don't have historical data to project from. So it's pretty much a blind run at this point, but still using phase analysis and demand supply zones. So what I have for tomorrow is possible ceiling on the up move, at least for the upcoming short time, is capped at about 16,300 or 16,275 if you want to short aggressively. On the downside, you have the level of 16,215 or to 16,200, which can act as a good support level. So until and unless Nifty breaks this flat trading range, it's not a big range from 200 to 290, it's just 90 points, about 0.5% for Nifty. Either side you have a range break, you can go for a confirmation based entry. That is the safest way to trade directionally on the index for now. Now, if you are comfortable using Fibonacci retracement from zone to zone, so what you have here is a correlation of the levels as well. Now you can see just below 16215 through 16200, the zone that I talked about on the support, you have 38.2 retracement as well, which also happens to be an important swing point, not swing point but a Fibonacci retracement level. Now if that level is broken, you can go for stepwise short targets targeting 50%, 61.8% and so on and so forth. On the upside, however, you will have to follow the trailing method, so you have to choose your poison, whatever floats your boat. But I would suggest don't go aggressively as soon as the market opens. Don't go for gap up, gap down based entries. Wait for the first 30 to 45 minutes, let the market decide where it wants to go, and then you can simply jump in with a strong sense of confirmation. When I talk about the option chain for Nifty, I have 16300, similar to what I said from the charts, as immediate resistance with 1.6 million added contracts. Significant at 16400 with 2.4 million added contracts. Support comes in at 16200, again same as the charts, with a very big 5.8 million addition of open interest. Significant at 16100 with a relatively puny 280,000 added contracts. It's still not negligible, but when compared with 5.8 million, 1.6 billion, 2.4 million, it's definitely not as much. So I would say 16200 is the key support level to watch out for. If that is broken, we can see a retracement till 16075 or 16100 tomorrow itself, again if that is broken decisively. If not, we might as well continue our way upwards. The PCR of volume comes out to be at 1.02, which does suggest that even the option buyers have been on the bearish side, looking at the chart, as how the higher highs have not been made yet. So I would suggest 16200 K niche you can go for shorts, and 16280, 290, or even to be safe 16300 K upper you can go for longs, but within that range don't really scale in that much, wait it out on the sidelines. Moving on to the second index, that is Banknifty. Now Banknifty ka chart does seem to be in a bit better position than Nifty, because Nifty as you can see, you don't have a higher high made yet. However, on Banknifty you have a clear higher high, higher low structure that has been running, and it does seem to be at a critical support level right now itself of about 35,950 to 36,000. It's a big round number, so psychological support, resistance term support theory might work here as well. But going just by the zones, this seems to be the key area to trade for tomorrow. Under that, you can go for shorts targeting 750 followed by 600. Above that, you can go for longs targeting 150, 250, 300 and so on. Just support levels, not support but swing levels, nothing else. When I talk about the option chain, about Banknifty, I have immediate resistance at 36,200, pretty far away. As you can see, it's pretty much aligned with the nearest swing high at 977,000 added contracts. Significant at 36,500 with 352,000 added contracts. Support comes in at 36,000 with 890,000 added contracts. Big round number, so of course that's going to be there. Significant very far away at 35,500, but with a healthy 1.1 million added contracts. The PCR is the sad thing here, unlike Nifty, it's not aggressively bearish, it's just at 0.81, which is moderately bearish, and 0.81 is something that you might not even pay attention to. You can ignore that part. Now again, if you are using Fibonacci retracements, if you are fine with that, from the nearest swing point to the highest swing point of the higher high, higher low, so the swing level that you have also happens to be the sweet point at 50%. So going by the Fibonacci retracement wala rule or the logic, the 61.8 is the farthest point that the retracement is allowed to. So 35,900 remains your key level for Banknifty. 35,900 K niche you can go stepwise targeting 35,800 and 700 respectively. As if the zone is sustained 0.5, you can go for upwards targeting, as I said, 100, 150, 200 respectively till it reaches the nearest swing point. Now these are all the charts that I had to discuss with you. This marks the conclusion for the index analysis as well as the equity watch list for tomorrow. It is the expiry, so I would strongly suggest moving ahead with caution. Wait for the first 30 to 45 minutes. As I always say, let the market give you a sense of direction, give you a bias so that you are not lost as in what to do and what trade to take. At least you have a sense of direction, which matters a lot, especially on days of expiry. I hope you have a wonderful, green and thrilling trading session tomorrow, and well, I hope most of you make a ton of money on the expiry. This is it from my side. Thank you for all the love and support. As usual, if you like the video, if you think the analysis helps you out, make sure to leave a nice comment, like the video, subscribe to the channel as well, and don't forget to click that bell notification icon. Thank you so much for watching. Have a good night. Bye.